Eco Money on Money FM 89.3.
You're listening to Eco Money on Money FM 89.3 with me, Rachel Kelly. Well, good news for sustainable finance. Global sustainable finance issuance volumes may be starting to see more green shoots in 2024. That's according to the latest research from ING Global Markets. It says that while volumes have retreated from the peak in 2021, which at the time was driven by a flurry of company sustainability targets, a COVID-19-induced surge in social debt, and an environmental, social and governance market where enthusiasm trumped scrutiny, issuance then declined in 2022 and 2023. But ING argues that things are on the upward trend. That's because we're starting to see a decent issuance level in 2024. In fact, for the first half of this year, issuance of sustainable debt around the world reached $800 billion. Now, that's almost at the same level that we saw in the first half of 2023. Why is this important? Well, it shows that momentum in sustainable finance is sustainable. Pardon the pun. ING adds that another visible trend is the increasing popularity of transition bonds, whose issuance was up almost eightfold in the first half of 2024 compared to the second half of 2023. Now, you remember that transition bonds allow companies to finance decarbonization activities that are not traditionally green, but can substantially reduce emissions in hard-to-abate sectors. Bringing you back home here to Singapore, and we have seen substantial strides towards the creation of a regional hub for sustainable finance as well as transition finance. Now, LGT Private Bank says that more than 80% of the funds it manages in its portfolio are geared to sustainability. So we're going to catch up with Mariam Ashroff, who's the head of sustainability management at LGT Private Bank, to get her take on key transition and sustainable finance trends. Mariam, thank you so much for taking the time to speak with us today.
My pleasure. Thank you for having me.
So, Mariam, let's start off. We're going to be talking about transition finance trends and, how it impacts both environmental and societal aspects. So perhaps we can start there and talk about why the investment landscape needs to evolve to support this.
So we currently live in a world where economic growth and sustainability are at odds with each other. And we already know all of the science. We know that it's human activity, or rather the energy mix that we have in place today, but that's the root cause of climate change. And if we do nothing at all, the climate models estimate that we only have till 2031 that we all agreed to keep to a certain budget to limit global warming to 1.5 degrees through the Paris Agreement in 2015. Not only is this something that's difficult to do, it's important to do, and we urgently need to do it. As you mentioned rightly, the energy transition is especially difficult. Growth in this region and energy demand, it's only increasing. So how do we then balance the phenomenon we have where we need more and more energy? We need it in much more cleaner sources quicker. The other issue is, energy systems can't be transformed overnight. And that's why we're talking about this transition. It's going to take time. Our economies are heavily reliant on coal power sources. As you know, 75 to 80% of the world's coal power sources come from Asia. Having this system entrenched in place, there's this fine balancing act we need to create between energy security, which is absolutely important, and the energy transition. And that's where I think, your question on, is this possible? How do we do it? Is critical.
Okay, but that said, often when I speak to finance players, they'll tell me that they've got the money, but there aren't projects to be funded. But on the flip side, when I talk to project managers, they'll say, we've got the projects, show me the money. So what's the actual situation here?
I think, in both cases, it's true, right? When, the financial institution says, oh, yeah, we've got the money, a financial institution is not going to fund just any project. Obviously, it has to be financially sound. It has to have clear impact metrics. It has to have a certain level of risk and return. On the energy side, yes, we've seen in 2023, China adding as much solar power as the whole world did in 2022. So, it is happening, perhaps not at the same scale as we expect it to. And the other aspect of it is we need a lot more of it. So, in many different ways. So one of the examples is for the last couple of years, Singapore has been looking into Singapore's energy mix is 90% natural gas, right? And while that's not thermal coal, it's also not a renewable energy source. And we've seen Singapore work on potentially a deal with Australia, and the very first iteration of it fell through. And now we've heard recently that there is a new deal, and it is to basically create a pipeline between Singapore and Australia in Darwin, where solar energy will be generated. And that's actually like a very entrepreneurial and a pioneering way of procuring energy, renewable energy into the grid. Obviously, it's never been done before at this scale, but it's important to have assessment and experimentation around this and willing parties to come together with, as you know from that deal, there are multiple different parties, multiple layers, governments, private sector, public, etc., funding this. And that is what's necessary. Pioneering ideas and multi-sector and multi-asset class cooperation.
Okay, talk to us about the role of blended finance then in balancing risk and returns to ensure the green projects can scale effectively.
I think one thing that is really important in sustainability is investing across the capital stack. So typically when you think about investors, they prefer certain asset classes. So some of them are, private equity investors, some of them are public. And then when we look at, say, from a private banking perspective, a wealthy individual, they look at their investment portfolio in one way, and then perhaps separately, they have their philanthropic capital in another way. But really, like when you think about the principles of blended finance, what it's trying to do is it's trying to take a more holistic view. So it's basically ensuring that there is a segment within the project that is called concessionary capital. So it is typically something like the seed money that you can think of in a startup, right? Someone has to come in with the concessionary capital to say, okay, we need to fund this new idea, this pioneering initiative so that it can scale. And that will then help de-risk the whole project, right? And that will then open up capital in different sources where the risk-return profiles, maybe a more demanding risk-return profile can be applied, bringing in additional layers of financing. And that's typically what is understood by blended financing. We've seen this happen in many different forms, in infrastructure project funding, where a development bank is involved, and then there is, say, other private sectors getting involved in funding different tranches, different terms and agreements. And that's how you actually take an idea to scale.
Okay, Mariam, so just to wrap up, we've spoken about transition. What else could we see from the finance world? What else needs to evolve to really drive things forward and bridge that transition gap?
One of the things we always think about, we could talk about like the complex structures, metrics, etc. But to begin with, what we really, really need is a mindset shift amongst investors. And we need every investor to understand the long-term financial risk of climate change and move from just talking about the energy transition or sustainability to really acting on it with their investment decisions. From personal experience, for us to bring about the mindset shift amongst our staff, 3 years ago, we developed this program called Strive to Impact. And it really just delves into climate science, decarbonization, what are the climate solutions we have out there. And through this, we help our staff understand the urgency of climate change. And we then inspire them to speak to their clients about this topic, right? So as a financial institution, we take our role in prioritizing decarbonization and investing in climate solutions very seriously. Similarly, now moving on from outside just our immediate horizon of our staff, we want to bring this change also and this information to our client base. And this year we're hosting the LGT Climate Conference in Singapore in October 2024. We hope to reach 300 clients. We think that it is a compelling message. We've talked about footprint and impact for so long. Now it's really time to act. And one of the best ways to act is through your investment decision. But aside from investor demand, I also think that some of the change that needs to happen is around measuring and communicating the impact of the investments that we put out there. Every little action counts. And if you're a long-term investor, you should be allocating part of your investments to sustainable investments.
Well, Mariam, thank you so much for taking the time to speak with us today. We've been speaking with Mariam Ashroff, who's the head of sustainability management at LGT Private Bank. I'm Rachel Kelly, and you've been listening to Eco Money on Money FM 89.3. I'm going to be back with you next week for more eco news and views, so keep it with us right here on Money FM 89.3.